When we talk about the Horn of Africa, two nations often dominate the conversation for very different reasons. On one hand, there's Ethiopia, a continental powerhouse. I don't think people fully grasp how big Ethiopia's economy really is, or the sheer velocity of its transformation over the past 2 decades. It's a story of scale, ambition, and the relentless pursuit of growth. On the other hand, there's Somalia, and I don't think people realize how strategically vital its coastline is, not just for the region, but for global maritime trade. Its ports are gateways to the world. It's a story of resilience, location, and untapped potential. Both matter immensely, just in different ways. One is a landlocked giant, the other a coastal nation with the longest shoreline in mainland Africa. So, who's really ahead as we look towards 2025? To answer that, we need to move beyond the headlines and dig into the data. In this analysis, we'll compare them across key economic, infrastructural, and strategic metrics, using projections from sources like the IMF and World Bank to paint a picture of their current standing and future trajectory. Let's start with the big picture numbers. In terms of overall economic size, there's no contest. Ethiopia's nominal GDP for 2025 is projected to be in the range of $180 to $190 billion. This makes it one of the largest economies in Africa, a reflection of its massive population of over 120 million people and a state-led development model that has prioritized industrialization and infrastructure for years. By contrast, Somalia, after decades of conflict and instability, is in a rebuilding phase. Its nominal GDP is projected to be near $10 to $12 billion. While this figure is small, it represents significant progress in a formalizing economy that is slowly but surely finding its footing. But when we look at this on a per-person basis, the picture becomes more nuanced. Ethiopia's GDP per capita is roughly $1,500. This figure highlights the challenge of spreading economic output across its vast population. Somalia's is significantly lower at around $600 per person. This reflects the nascent stage of its economic recovery and the work that lies ahead to improve livelihoods for its approximately 18 million citizens. These numbers set the stage. One country defined by its enormous scale, the other by its journey of recovery. Now, let's talk about momentum. For over a decade, Ethiopia was one of the world's fastest-growing economies. Looking ahead to 2025, its real GDP growth is expected to be roaring at a formidable 6 to 7%. This is driven by public investment and a burgeoning manufacturing sector. However, this rapid growth comes with a significant challenge: inflation. For years, Ethiopia has battled double-digit inflation, often exceeding 20 or even 30%, which erodes purchasing power and creates economic uncertainty. Somalia's story is one of gradual stabilization. Its economy is slowly recovering, with growth projected at a more modest 2 to 3%. This growth is fragile but resilient, largely fueled by the private sector, particularly in telecommunications and financial services, and supported by remittances from its large diaspora. Somalia's inflation has been more moderate, but its economy remains highly vulnerable to climate shocks like droughts and floods, which can drastically impact growth and stability. So what powers these two economies? Their production bases are fundamentally different. Ethiopia is, at its core, an agricultural heavyweight. This sector employs the majority of its population and is a cornerstone of the economy. It's the birthplace of coffee, and the bean remains its single most important export, a vital source of foreign currency. It's also a major producer of staples like teff, the grain used to make its famous injera bread, and it holds one of Africa's largest livestock populations. But Ethiopia's ambition extends far beyond the farm. The government has been aggressively industrializing, with a focus on sectors like textiles and garments, attracting foreign investment into massive industrial parks. Construction materials, especially cement, have boomed to support the country's infrastructure drive. And perhaps most critically, Ethiopia is harnessing its rivers to become a regional energy giant through massive hydropower projects. Somalia's economy, in contrast, is built on different pillars. It leans heavily on livestock, which has traditionally been the backbone of its society and its primary export, especially to markets in the Gulf. With the longest coastline in mainland Africa, its fisheries sector has enormous, largely untapped potential for growth. But the most dynamic part of Somalia's economy is its remittance-fueled service sector. A world-class telecommunications and mobile money system, born out of necessity in a stateless environment, has become a key economic driver, facilitating the flow of billions of dollars from the Somali diaspora each year. These differing economic structures are reflected in their infrastructure. As a landlocked nation, Ethiopia's survival depends on its connections to the sea. It has invested heavily in modern railways, most notably the line connecting Addis Ababa to the port of Djibouti. It has also undertaken big road projects to link its agricultural heartlands and industrial parks to these trade corridors. And the centerpiece of its infrastructure strategy is the Grand Ethiopian Renaissance Dam, or GERD, a mega project designed to secure the country's energy future and turn it into a major power exporter. Somalia's terrestrial infrastructure, after years of neglect and conflict, is patchy and in need of significant investment. Roads connecting major cities and production zones are a key priority for its government and international partners. But where Somalia holds a powerful strategic card is its coastline. It has multiple ports that are crucial for its own economy and hold immense potential for regional trade. The port of Mogadishu is the country's busiest, serving the capital and its hinterland. Kismayo in the south is another key hub, and the port of Berbera, operated by DP World, has seen major upgrades and is positioned as a potential alternative gateway for Ethiopia. This extensive coastal access gives Somalia significant leverage and represents its greatest long-term economic asset, its coastal trade potential. This leads us to trade and investment. Ethiopia's large domestic market and state-led push for industrialization have made it a major destination for foreign direct investment, or FDI. China has been a paramount partner, financing and building much of its critical infrastructure. The UAE has also become a key investor, particularly in logistics. And Turkey is a major player in its manufacturing sector. Ethiopia's export basket is diversifying. While coffee remains king, it also exports gold, flowers, and increasingly electricity to its neighbors. Somalia's investment landscape is different. Its formal trade is smaller, and it relies heavily on imports. Exports are still dominated by traditional products like livestock and fish. The most significant source of capital comes from its own people. The Somali diaspora is the country's primary investor, channeling funds into everything from real estate and construction to technology startups and service businesses. This diaspora-led investment is a powerful engine of resilience and recovery. Of course, no analysis is complete without looking at the risks. Ethiopia's state-led growth model has come at a cost. The country faces significant debt strains from its massive infrastructure spending. Chronic high inflation remains a major threat to economic stability. Furthermore, internal conflicts and political tensions pose ongoing risks to its long-term development path. For Somalia, the primary challenges are security and climate change. While progress has been made, establishing full state authority and security across the country is a long-term endeavor. At the same time, it is one of the world's most climate-vulnerable nations, with recurring droughts and floods that threaten both lives and livelihoods, putting immense pressure on its agricultural base and overall stability. So, what is the strategic outlook? The dynamic between these two nations is central to the future of the Horn of Africa. Ethiopia is a demographic and economic giant, but its landlocked status is its primary strategic vulnerability. It is existentially dependent on access to the sea, a fact that shapes its entire foreign policy. Somalia, while economically smaller, holds the geographic key to that access. Its long coastline overlooks the Gulf of Aden, one of the busiest and most critical maritime shipping lanes in the world. The stability and development of Somali ports are therefore not just a Somali issue, but a regional and global one. The interplay between Ethiopia's need for sea access and Somalia's control of its coastline will define their relationship for decades to come. So, who is ahead in 2025? The answer is not straightforward, because they aren't running the same race. Ethiopia is clearly ahead in terms of sheer economic scale, industrial capacity, and proven growth. It is a fast-growing industrializer with the economic mass to shape regional dynamics. However, it is constrained by its landlocked geography, high debt, and inflationary pressures. Somalia is smaller but resilient. Its primary advantage is strategic, not economic. It is a port-centric economy with unparalleled geographic leverage and huge strategic upside. Its recovery is real but fragile and deeply dependent on improving security and managing climate shocks. Ultimately, asking which matters more is the wrong question. Both are critical. Ethiopia provides the economic engine, while Somalia provides the strategic gateway. They have different strengths, different risks, but they share the same neighborhood. Their futures are intertwined, and the stability and prosperity of the Horn of Africa depend on both of them succeeding, not on one getting ahead of the other. Their paths are different, but their destination, a more stable and prosperous future, is a shared one.